Joining us to discuss is Bloomberg IPO reporter Bailey Lipschultz and our chief Wall Street correspondent Sridhar Natarajan. Bailey, how do we even gear ourselves up for a historic week like this? And how does the market even ready itself for an IPO of this size to hit?
We have Matt Miller running around clapping, getting people jacked up. That's how we get excited for this IPO.
Me and Jamie Dimon.
You and Jamie Dimon, Elon Musk, put him in the room. No, I mean, I think the big question right now is investment kind of bankers are pulling these orders. So we already have reported that they already have more demand than there are shares available. That pretty much happens in every IPO, or should happen in every IPO. The big question now is, as they pull in the orders from international banks, as they pull in the orders from the retail community, how are they going to distribute, again, a $75 billion IPO, and what does the plumbing actually look like when we get to Thursday night when these shares are being distributed and people are being told what they got, and how does it trade when it opens on Friday? Do we see investors pulling money in the coming days and weeks? Again, I've kind of been beating the drum that this has been the worst kept secret. We've known $75 billion. We've known $1.75 trillion as a valuation. So any professional money manager has been well prepared for a number of months for this deal.
And it seems also like everyone's coming to market now, Sri. Is that the case? Are IPOs ramping up to a level that's going to make these bankers a lot more money this year than they earned last year or any year since 2021?
Look, at least in the mega deal space, right? Because you know that after SpaceX, you're thinking about Anthropic and OpenAI, and some of these AI companies really do have enormous capital needs, and therefore you will see a race towards the end of the year to see who comes out first. Will it be Anthropic that gets to IPO first? Will it be OpenAI that gets to IPO before them? Because the bankers do say whoever's first out the gate definitely has the advantage, and that's why SpaceX probably coming in makes life a little bit harder for everyone who follows, just because of its sheer size. Like you said, a $75 billion capital raise is no easy matter, even if there is enormous enthusiasm, and even if you believe some of the staggering projections from the bankers.
But we have seen Alphabet do an $85 billion capital raise.
You have
no
to keep
problem.
In mind, but a good chunk of that was an ATM, so it's actually not raised yet. So a good portion of that $80 billion headline number is not actually equity being traded.
That's an at-the-market sale.
That's an at-the-market sale that they can tap as much as they want. So there is a convertible aspect to it. Again, it goes back to pulling every lever that they can and want to pull.
So I don't know. I'll take the other side of Bailey's trade on the lack of enthusiasm. Still, even with the at-the-market, if you put that aside, a $40 billion raise, being able to upsize it just in the last week, that itself is incredible. And to have pulled it off in such a stealthy fashion without having a major impact on the stock tells you that there is still good absorption capacity in the market.
But what about for everything else? I mean, I was talking to a private equity executive who was looking at IPOing a company, and their bankers were like, don't do it. Don't IPO now. Now is a horrible time to IPO any company that isn't SpaceX, Anthropic, or OpenAI.
Well, I think that anything with an AI flavor is performing well or trading well and can get deals done. We saw Sienna line up a $2 billion convertible bond that, when I talk to investors, that's going to price tonight. They're jacked up on that. That's a stock up more than 500%. But if you are a B or C list company that has a lot of debt from a PE perspective, it's a lot tougher.
Yeah, and if you're a private equity executive, it kind of sucks to be hearing this now 3 or 4 years in a row. Don't do it. That's what they've been hearing for the last few years, and now with these big companies coming into play, life becomes a little bit harder for a lot of these private equity backed companies, and that's not good news for a sector that's already been stuck with so many companies unable to find the right exit opportunity.
Sri, did your sources worry at all on Friday? Were you talking to people who were freaking out about the almost 5% drop on the NASDAQ 100 as we head into SpaceX IPO week?
I mean, you have to imagine that was a big cause of concern going into Friday evening, but as you wake up Monday morning and you see that there is some level of stability, at least in US markets, the worry is in the past. The worry is the worry of the last week, and that's been the case with this market. Every day we've had a massive pullback. It doesn't seem to persist. It doesn't seem to last, and that is giving bankers a lot more confidence than in usual circumstances when you see a 4 or 5% pullback in the market.
And are we going to look back at this period and say John Gray was right, that this was the year of the IPO, or is it the year of the IPO if you're just like a big AI-related IPO?
Both could be accurate.
I mean, 2020 was the year of the IPO.
Was the year of the IPO, and SPACs aside, there still was a lot of cash raised by a lot of companies, whereas this is very much a handful of huge companies.